save for retirement. It's do yourself a favor, do your future self a favor, and put some money away because you're going to love it. You're going to love yourself for doing it. No one ever regrets having too much money in retirement. Like, oh, why did I save that money? Like, no. When you're in retirement, you'll be so glad you did it. So do it today. Talk to your tax advisor. Hey, how much can I put away today? What's the best strategy for me? Because everyone has a different financial picture. Get that advice from your financial advisor, your tax advisor, and then pull the trigger and do it. And your future self will thank you.
Hello, Ginny Bolling here with the Pivotal REI Podcast, the Real Estate Investment Podcast, formerly the Pivot to Prosperity Podcast. And today we have Kareen Hall with us. So,
Hey.
Kareen, thank you for coming on.
Thank you.
Appreciate it. And you are a mover and a shaker in the self-directed IRA world. You're very entrenched. We're going to get into that, but I want to read your bio first. Kareen is the founder and CEO of UDirect IRA Services, LLC, a leading provider of self-directed IRA accounts since 2009. With over 2 decades of experience in real estate, mortgage lending, and property management, especially self-directed IRAs, Kareen has empowered thousands of people to take control of their retirement funds and invest in alternative assets such as real estate, private lending, precious metals, and more. Her expertise in self-directed retirement accounts has made her a sought-after speaker, and she has been a featured panelist and presenter at industry-leading conferences including Bigger Pockets, BPCon 2022, 23, 24, and 25. And Kareen is also the founder of OCREA, Orange County Real Estate Investor Association. I didn't remember that. Okay.
Yeah.
Where she fosters a vibrant community of real estate investors through education and networking since 2012. That's the Orange County, California one, right?
It is. Yeah, we're on Zoom for some of the meetings. Like this month, we'll have a live meeting, but we're also on Zoom. So sometimes we will have an online meeting. So no matter where you are, you can join us and learn from our speakers. Yeah.
I tuned in when I first started getting into the investors accidentally to that one because I was thinking Orange County, Florida, right?
Oh.
So I actually made a bridge to a couple of people there because actually Hunter Thompson was involved also over there. So anyway.
Sure. Yeah, before he moved to Scottsdale. Yeah.
Yeah, that's a huge organization though, OCREA. How many members do you have? Do you know?
I mean, well, they join us online, so we have thousands,
Yeah.
Yeah.
Yeah. Right. And adding to her accolades, Kareen is now the author of a newly published self-directed IRA of the newly published self-directed IRA investing,
Hey, I've got a copy right here.
a Bigger Pockets guide. Yes, yes. Hold it up a little closer if you can.
Yeah.
There you go. Yeah. Published by Bigger Pockets Publishing, this comprehensive guide combines actionable insights, real-world examples, and Kareen's extensive industry knowledge to help investors confidently navigate the world of self-directed retirement accounts. Beyond her professional achievements, Kareen's entrepreneurial journey has enabled her to support meaningful charitable giving and inspire others to take control of their financial futures. She also serves on the board of directors of the Council on Aging, Southern California, as well as the board of RETA, the Retirement Industry Trust Association, where she continues to advocate for transparency and education in the retirement industry. And so, yeah, you are a busy girl. You stay entrenched and you speak on many stages because you do care about the ethics and education of the industry, which is why you're here. I love that you're here again. So, this is you're my second time to have you, and I'm glad that you're going to be one of my frequent contributors, I think. So that would be good.
What I really, really care about is I really care about people being able to retire, comfortably. It's just recently I put together, for the new year, a new article on how if you're 65, you've got $1 million. How are you going to live to the 85, say? What is that going to look like? And it's not a pretty picture. $1 million is a lot of money for a lot of people. Some of us, when you're investing in big deals, we can have like other people's money, $1 million, but like our own in the bank. So I thought, well, just for the average American, I mean, how do you do that? And and how do you save and how do you get there? So self-directed IRAs are just one step on that path. It's just incredibly crucial that everybody is investing and saving and planning for that day, so that we don't get caught short, you know?
You know what an interesting comment was at one of the new groups I went to. I was trying not to monopolize conversation. I ended up speaking up a bunch of times, and then somebody I know said, I'm already over 62. I've asked my CPA, and they say it's not worth me opening a self-directed IRA at my age.
That's
And I'm
silly.
like,
Well, I mean, unless you're terminally ill, God bless you, I think it's never too late. Like if you're 62, you could have a 30-year horizon. You need to pay for your living. And when you're already at 62, you can take distributions without penalties. They'd still be taxable, whether regardless, they'd be taxable, but without penalty at the age of 62. So if you needed to personally use the proceeds from your IRA investments, you could. So of course it's not too late. That's silly.
well, and what occurred to me, and correct me if I'm wrong, was that what she could be doing is investing pre and post tax different vehicles, Roth and IRA, and building it up, just growing it so that it's tax free in the one case and pre-tax compounding bigger.
Yeah.
Still, even if she
Yeah.
is qualified, but the the tool still works. Is
Yeah. Well, both ways. Yeah. Whether you want to, take money out and live on some of the proceeds, or you're just going to take that and build it. It's great for both.
right, right. So yeah, that I'll have to share this with her. Um, and as you know, we're going to ask you to give us your main takeaway that you want the listeners to have in a nice, succinct manner. And we're going to do this twice. So here goes. What is your main takeaway for listeners?
Well, I kind of alluded to it here, and that is save for retirement. Just like an action step you can take from listening to this is to talk to your competent tax professional and ask them, what is the right amount of a contribution for me to make in this 2026 tax year? If you didn't make a 2025 contribution, you may be able to make a post-year contribution as well. So ask, how much can I contribute? Where will I get the most bang for the buck? In other words, to a Roth account, will that, and get tax advice for your situation, but then make those contributions and put that money away for your future self. Do yourself a favor so you have that money down the road.
So we were just talking about the end of year. That deadline was December for contributions, right?
No, actually, no, it wasn't. It was a deadline for like if you're going to do a conversion, like a Roth conversion, but you can make, say, you can make a prior year contribution. So if you haven't made a 2025 contribution yet, you can make a 2025 contribution, say in a traditional Roth, all the way up until the tax filing date, or like April 15th, traditionally. So you can still make a contribution up until then that will count for that tax year.
I thought it was the reverse, that you had till April 15th for the conversion, but not for the
No,
direct. I
no.
see. Okay. Good. Well, all right. And so yeah, people need to be talking to their accountants and figuring that out and what they're going to do. And as far as the types of accounts that you have, can you talk a little about that?
Sure, any kind of IRA can be self-directed, any kind. So it's not like there's a special self-directed kind. When IRAs were created 50 years ago, there was the traditional, well, ultimately where we stand now, it's the traditional Roth, SEP, simple, spousal, inherited IRAs. Okay, that's 6 IRA types. Whether you want to invest those in the stock market or you want to self-direct into alternative assets, you can do that. And so those are all the types of IRAs that you can invest in or
Most
with.
people don't realize they can do that, that they can take it out of an IRA and
Yeah,
decide for themselves, self-direct into alternatives like real estate.
right. And you need a special, that's why we're here, because you need a special kind, it needs to be held custodied in a certain way, with a custodian that will actually allow those assets. So if you go to, say, I like Fidelity or something, they don't want alternative assets, so because they call them sometimes like hard to value assets or something like this. And I don't think they really are, but it's a decision. It's a business decision on their part not to handle alternatives and to handle market correlated assets. But we handle the alternatives, which would be, again, syndications, it would be notes, it would be, actually, real estate that you can touch. It would be precious metals, even cryptocurrency. It's just so many different things. You can buy performing and non-performing debt, invest in that in your IRA. But whatever you know personally and you understand, that's the asset to go for because it's self-directed. You're considered the financial expert in this area. Because it is self-directed. So you're your own advisor. You're doing the research on the asset, you're choosing the asset, you're self-directing the asset. So you want to make sure it's an asset that you really fully understand. So due diligence is key before you self-direct. But you can self-direct, and you've been able to for 50 years.
When you say self-direct, what you're talking about is invest before you actually make the investment.
I mean, by self-direct, I mean use your retirement money to invest in alternative assets.
Yeah. So, art and collectibles, if that's what somebody knows most about,
No,
can they do that?
yeah, collectibles and life insurance are the only things that are excluded from IRAs.
Okay.
Well, an S corp, stock in an S corp is excluded, but not because the IRS says so, but because an S corp doesn't allow it. So, but really, an IRA can invest in anything except life insurance contracts and collectibles.
Gotcha. Okay. Okay. So, what are some of the unusual things you have clients collecting or investing in
Yeah. Well,
besides real
I was
estate?
on a podcast recently and it kind of blew up the internet. I had millions of views on this, millions of hits,
What?
because I was talking about a situation that happened in 2007 where a young man invested his Roth IRA and bought tickets to the Super Bowl. And so I had all kinds of comments. I had to stop even looking at them. Like, oh, you can't do that. This woman's crazy, because people don't know about self-directing. But like in this case, it wasn't a collectible ticket, so it wasn't a collectible. The person was not in the business or trade. They weren't a ticket broker, where they invested in something that's also their business. It wasn't like that. It was just a random one-off kind of a thing. But the thing, in order to invest in an asset like Super Bowl tickets, what you have to do is you have to have a custodian that will agree to custody that asset. So that's the first step, is talk to the custodian. Hey, I want to do this. Another way to do that is to have what we call an IRA-owned LLC, sometimes called a checkbook IRA, and your IRA could do it that way. As long as you're not, investing in collectibles, as long as you're not participating in a, trade or business, which could lead to a special tax. There are a lot of, if you really get into the tax code, there are a lot of things that can hit you, but that's what this guy did. So he bought the tickets with his Roth IRA, sold them at a profit. Profit went back into his Roth IRA, tax-free for life. And I wrote an article on the UDirect website, which is udirectira.com, to dispel all the feedback that I got from that post. But it probably, I think, like something like 7 million or something like this hits on this video. It was great.
Wow. Wow.
Yeah.
That's interesting.
Yeah.
And he bought it to resell, and that was legal to do, I guess, right?
Well, he bought the tickets and he invested his Roth IRA, bought them. And so it was an investment. He bought them, he didn't buy them personally. His Roth IRA bought them, because if you bought them personally, the Roth IRA couldn't participate. But the Roth IRA invested in the tickets, and that was the investment.
Interesting. Now,
Yeah.
7 million of views. But so how much did he make on it? Do you remember?
Oh, I don't know. It was 2007. I don't remember, it was a
Oh,
bit
okay.
ago, but whatever the delta was at that time, and the difference between the purchase and the sell. But that can get pretty high. But it's just, like, it's a fun anecdote. It's not something that people
Yeah.
usually do or often do. It's a lot of times the self-directed space assets aren't that sexy. It's a note. I'm going to lend you money. But where it's not a super zoom kind of story like that. It can be very profitable. A note can be very profitable. You lend someone money from your IRA, they pay your IRA back. That can be a very, very profitable, not sexy asset, So
Right, right. And Do you have any kinds of data to say what percent of people know or use self-directed IRAs?
Hmm. Not really. I'll tell you what I do know. But so as an industry, all the self-directed IRA companies are publicly held, and our account holders are investing in alternative assets, which are typically not, there's no ticker for how many syndications were sold today. Do you know what I mean? So the statistics for the assets aren't really out there publicly. But what we estimate, you mentioned I sit on the board for the Retirement Industry Trust Association. So we estimate about 4% of IRA um, assets are in alternatives. So it's a very small piece of the puzzle, which is why even 50 years later, it's still new to people.
Oh, exactly. So the big beautiful bill, right? That's supposed
Yeah,
to start opening the door for people to in their work environment, the 401ks.
right.
You know any more yet about how employers are going to be able to do this?
I do. I know more than the last time we talked. So what it will be, it won't be like your solo, like your 401k at work will be able to go lend money to people. It's not going to be like a self-directed IRA. But what it will do, it will be an employer program, an employer, plan that has access to these. They're calling them sleeves of assets. We like a mutual fund is a grouping of funds, right? That's a mutual fund. Well, in this case, it would be like a mutual fund, but with alternatives. They're calling it a sleeve of alternative assets. So there you go. But so the custodian will be acting in that case as the accredited investor. So you could work like at Home Depot, not be an accredited investor and still invest in alternative assets because it's going to be offered in a pool by the 401k custodian, for example. That's how it would work. But what it's going to do is open people's minds to the idea of alternatives.
Yeah.
And so that's why it's really going to benefit our industry hugely. And we're really excited about it.
Yeah, as we know, people need to be able to grow their wealth faster than right now.
Yeah.
The stock market's been pretty good, but it's really considered overvalued by a lot of people.
Well, and we have these black swans, don't we? I mean, every investment, there's no such thing as an investment that doesn't have risk, right? But we've had these black swan events in our lives where we've just seen boom, it just like, and it doesn't take long,
Right,
where it'll bottom out and then come back. I mean, if you're old enough to or at an age where you can live through the recovery and you don't need all those assets, then that's good for you.
right, right.
That's in the
Well,
stock market, but alternatives are different, right?
yeah, most of them, a lot of them are tangible. That's why though, right? Because whether it's gold or silver or real estate, at
Yeah,
least it's tangible so that it doesn't dissolve and disappear completely like stocks and
that's true.
companies.
And
So,
speaking of precious metals, those are having a huge run up right now with currency being an issue. Like we don't have fiat currency because, obviously Nixon took us off the gold standard in 1970, but now we're looking at Bitcoin, which is super fiat, which means it doesn't have an underlying asset. We're just saying it's worth so much and we're assigning value to that. And so precious metals are just skyrocketing. I think I saw, now this will be dated even by the time that this airs, but it was $80 an ounce for, that was the spot price for an ounce of silver the other day, $83, something like that. But a couple of years ago, not that long ago, I was buying ounces of silver for $13 an ounce. So, the assets, you want to diversify, but precious
yeah.
metals are seeing a big uptick right now.
Yeah, yeah, for sure. And with the unrest in the world right now, it's probably going to keep going up, it sounds like to me.
They're
Yeah.
predicting 200 an ounce, but we'll see.
Oh, wow. I should have bought some when I was back. I was at 17, I think, an
Yeah.
ounce at one point. And
Or if it's 83 now and it's going to be 200 later, maybe today's the day to
yeah,
do that,
maybe today's the day.
Yeah.
Yeah, yeah. Well, so talk through the process. If somebody is new, they've just heard about
Mhm.
self-directed IRAs, they've got
Yeah.
some IRA money from an employer, walk through the process they would need to do, would you?
Sure, it's incredibly easy. I mean, you go to our first the hard part is the due diligence on the asset. Okay, so you picked your asset. But you go to our website, it's udirectira.com. You just click a button, it says open an account. There's an application, it's digital. You put in your information, 10 minutes later, you fill out, your name and your social in this. If you want to tell us if you want to transfer money, if you're going to contribute, if you're going to do a rollover. And about 10 minutes later, you have an account and you have access to our whole digital, we call it the business platform, to our whole platform, which has got an array of things, choices and things for you to do. You can contribute through there. You can, just log in and invest there. We don't sell any assets, I need to mention. So we don't endorse or sell assets, but we do provide access to precious metals on our business platform. We provide access to cryptocurrency on our platform.
Did just those two main things, or do you have
Well,
other things
yes.
too?
No, we don't.
Okay. Yeah,
But because, yeah, no, just those two assets.
gotcha. Okay. Right. Well, so yeah, that's pretty easy. Plus, as we talked about last time, it's hard for people to realize they're not really withdrawing it from the
No,
IRA. They're
no.
transferring it, right?
Exactly right. Right. It's an IRA to IRA. Say when you transfer the money, first off, the transfer and the part of moving from one account to the other is not taxable. So as long as you don't take personal possession of the money, moving it over, not taxable to you. That's easy. But it's like your IRA, say a typical IRA invests in a stock. You don't withdraw it from your IRA and go invest in a stock. You don't, same with the self-directed IRA. You don't withdraw it. The IRA invests. So it's exactly the same as a typical IRA. It's just a different asset.
Yeah. So when you take title to something like real estate, how would you title your deed then?
Well, it's the IRA. The IRA is taking is the buyer. So there's a special titling. But say, for example, it could be the custodian for the benefit of the IRA, something like that.
Right. Yeah, that's important. A lot of people. So if they're getting ready to say they like something they want to put under contract, but they're going to use their IRA, they
Yes.
need to be sure they don't put their name on the contract, at
No.
least unless they say or assignee
No.
or something, right?
No.
Or
So
it
what you
can't
would
even
do
have your name.
No. Well, you can't have your name, but I'll explain that if your IRA is going to invest in real estate, the first thing you do is you talk to your custodian, and then and say, hey, this is what I'm going to do. Get some guidance, and then complete the contract or say the offer to purchase, whatever, if it's real estate, and then you submit it to us, and we review it. And so we're going to double check and make sure that the IRA is in fact on the offer, and that this is a deal that the IRA is actually acquiring and not the person.
So if somebody decides after they've entered the contract that they want to actually use their IRA, they can't assign the contract to their IRA.
No, because you're disallowed to your IRA.
Yep.
I guess what you'd have to do is exit that escrow or that situation and get into a new situation, even on the same property.
Uh,
But you can, yeah, but you're not going to assign it to yourself because you're disallowed to your own IRA. There are disallowed people. It's, you and your spouse, parents and grandparents, children and grandchildren, up and down the family tree, disallowed, plus a 50-50 business partner and anybody who's a fiduciary to the deal. They are disallowed parties, and your IRA does not invest with them, and they don't provide services to the plan either.
got to be very, very clear, right? For
Well, that's why we're
anybody.
here. Yeah.
Yeah,
Yeah, to
yeah, yeah.
walk people through this. You can get a little bit in the weeds, but that's why we're here to hold people's hands through the whole situation, answer all the questions, take a look at the docs, and whether or not a prohibited transaction occurs is the responsibility of the account holder. But we are here to look at it. If we see something, we're going to say something and tell you, hey, this asset is not administratively feasible. And the reason it isn't is because it's a prohibited transaction. And here's why we believe that. That's what if we run into that situation, that's what we would say.
Is there a solution for that typically?
Well, don't invest in that deal, with an IRA, maybe invest in it personally, because a prohibited transaction means that the tax protected little bubble of your IRA bursts, and now the entire value of the IRA becomes taxable to you with penalties. So you lose the tax protection, you got to pay tax. It's not a good situation. So we don't want that to happen to you. So we want to, guide you through the process.
So when people hear someone say blowing up their IRA, that's what they mean, right?
That's what they mean. Yeah. That they, yeah.
they did something they shouldn't have done, right?
Well, for example, like in what the apartment buildings, say, for example, if you're like a GP and you're raising capital for, say, like apartment buildings, as a GP, you're offering services to the plan and you're also receiving personal benefit from that deal. So as a GP, you're disallowed to that deal. So your IRA isn't going in your own deal for those reasons. And if you do that, then you would blow up your IRA for doing that. Yeah.
And how does the IRS find out about these things typically, or how does it end up becoming
Right.
known?
Well, a lot of times they don't know unless that you get audited, unless your neighbor tells on you. Don't think it doesn't happen, um, or something will come up. But there'll be audits every year. We submit 5498 and a 1099 if they're given the right situations to the IRS. So we're telling them every year what your IRA holds. It used to be we just said this is the balance. But I don't know, maybe 10 years ago, the IRS changed that and added a box to these forms where we have to tell them what type of asset is in the IRA, right? So now say it's one of these checkbook IRAs, we're telling the IRS that you have one of those. We have to disclose. So if the IRS decided to audit and they wanted a lot of low-hanging fruit, they would choose that checkbook IRA because people are using this, vehicle, this where they have access to their retirement dollars without the oversight of a self-directed IRA company, making whatever deal they feel like. So that could get audited. Believe me, that is low-hanging fruit.
Right, most definitely.
Yeah.
All right. Well, so as I always do towards the end of the show, I ask everyone if there is a pivotal person or event that's brought them to where they are today or pushing them towards some particular goal. What's your situation?
My situation was getting fired. It was awesome. Not at the time, but I was working for another self-directed IRA company and they fired me, which was crazy. And we'll just let that go. And as a result, I founded UDirect IRA Services 16 years ago, and now we have 1.2 billion in assets under management. So that was like the best thing that ever happened. Pivotal moment.
Ding, ding, you get some points for that.
Yeah.
Under management. Okay, yeah. And
No, we've been audited, we've been, reviewed, and we've just the whole review process. That's also pivotal moments when you go through those things too, and always a clean slate, so that's been it's real harrowing at the time, like, oh gosh. But when you realize you're not doing anything wrong, and they don't, of course, they're not finding anything wrong because there isn't anything to find, and so we've been exonerated in that way from audits and what else? Uh, Different kinds of reviews, state reviews, IRS reviews, FBI reviews. Mostly it's because the reason for that is because some of the asset sponsors will be bad actors and they'll be bringing fraud to us. So we get involved in fraud in that way. And so then we hold the records. So sometimes we get subpoenaed for records, but then sometimes that leads to them looking at us like, have a look, here we are.
do you have to do that what's it called? KYC, know your customer stuff to validate
No,
people?
because we're not asset sponsors. We are not selling assets. We're not
Okay.
endorsing assets or making any money from the assets that are we don't make a profit when someone invests, if that makes sense. So if you buy the certain syndication, it's not like that syndication operator is giving us a kickback. That's not okay. We don't participate in the profit of those assets in that way. Yeah.
Okay. Okay. Yeah. There's definitely a lot of different ways that money gets into trouble.
That's true. It's true.
Yeah, it's not money actually. It's the people, right? The bad actors. Well,
Yeah.
great. Well, okay. And let me have you say your takeaway again.
Well, my takeaway again is save for retirement. It's do yourself a favor, do your future self a favor, and put some money away because you're going to love it. You're going to love yourself for doing it. No one ever regrets having too much money in retirement. Like, oh, why did I save that money? Like, no. When you're in retirement, you'll be so glad you did it. So do it today. Talk to your tax advisor. Hey, how much can I put away today? What's the best strategy for me? Because everyone has a different financial picture. Get that advice from your financial advisor, your tax advisor, and then pull the trigger and do it. And your future self will thank you.
Or what your age is almost, right? Yeah.
regardless of your age, you
Yeah.
just, yeah.
Right. Well, so tell people how they can get in touch with you and how they can get your book.
Yeah, the book is on, it's called The Bigger Pockets Guide to Self-Directed IRA Investing. It's on Amazon, it's on Barnes and Noble, and it's at biggerpockets.com/SDIRA if you want to find it in any of those locations. And so this has been really fun having this book this year. And so there's that. And the way you get a hold of us, the easiest way is email us at you can see my logo here, the letter info at the letter udirectira.com. So info@udirectira.com. And then we'll get back to you right away and, ask us your questions, sign up for a free 30-minute consultation, and we'd love to help you.
Great, great. And you're known for that. You are definitely well known in the community. And there's a lot of us investors that have people that are looking, they want to invest with us, but they're not sure how. And it's just much easier to turn them over to people like yourself and let them learn directly how to put their money to work in better and different ways.
Yeah, it's so true. So
Yeah.
true.
Yeah. Super. Well, thank you so much for coming on, Karen. And I will be putting this information into the show notes so that people will be able to get it. And we'll be talking soon.
Thank you.